Hey everybody, this is John and welcome to the free video. Let's dive in here and look at the indexes. So you can see a couple things here. We've had obviously a great run in the S&Ps. We have a daily squeeze here that's officially run out of momentum. We ran smack into this fire line and got rejected. Now for those of you that don't know fire lines, they are the strongest by far of all of the voodoo lines, and typically you can see the last one. It's kind of hard to see all that, right? Let me move away some of these other ones. And you can see that typically a fire line, it becomes a very, very strong area of resistance, first of all. Okay, remember this is a weekly chart, so that was for 4 or 5 months. It stayed below this fire line. And when it broke above it, it came back and tested it two times. So this is almost a year where we hung out around this level, and it actually then came back and tested it again and tested it again. Okay, so now look where we are. We've had this great move, and we're going smack dab into this next fire line. And I think of it this way: that best case scenario, that this market consolidates and trades around here for the next year. Okay, and then from there it could explode higher. Now obviously anything can happen, but the reason I'm mentioning this is we want to think about it as the same strategies that work for X amount of time aren't the same strategies that are going to work forever. It's the same, the skills that got you out of Egypt are not the same skills that are going to get you to the promised land. And so the question becomes, is this simply going to be a pullback that's viable and we go merrily on our way, or do we want to be prepared for something else? Is there other types of trade in here that are going to make more sense? And especially here on the Qs, where we had a weekly squeeze, which is great to the long side, but since now we've lost momentum, that opens up a door for a retracement back to the 21 period moving average on the weekly, but also we've closed below the 21 2 days in a row. We've now today have the potential to kind of kiss that goodbye. Okay, now we've all seen this year that anything on the short side is certainly either something, if you're short more than like 3 hours, you're going to get stopped out, right? This upward trend has been so strong, but on something like this, we don't want to also just blindly buy the dip on the indexes when there's all these different allocations going on. So two things about this. One is we look at what I call honey badger type stocks that don't care what's going on. So stocks like McDonald's, they're making new all-time highs. Money is continuing to flow into these. Funds want more, more, and more. And I'll cover some more of these in the premium video. And then from there, we want to be able to understand the concept of reversion to the mean trading, or RTM. So let's spend a little bit of time talking about that. So what we want to be aware of in this market is just the idea that funds are doing a couple of different things. Okay, first of all, they like to get into moves like this and hold on. Okay, but then there's two things that they'll do from here. One, to reduce volatility, i.e. instead of holding back for some normal 50% pullback, they will rotate into other sectors. So they may get out of tech, okay, and then into, say, energy. Okay, so out of tech and into energy, and then that reduces the overall portfolio volatility in terms of as measured, by their benchmark, the SPX. All right, and that can get a little complicated, but just you want to know that that's going on under the scene all the time. The other thing is, and it's very common when you get a high running stock where everybody's putting their money, and Nvidia is a good one here, is that at some point it becomes a larger part of their portfolio than their charter permits. So as an example, the charter might say, you know what, our fund can't own more than 1% of any given stock. What I mean by that is if it's a $100 million fund, we can't put more than $1 million in any one stock. What happens, they put $750,000 into Nvidia, it goes and goes and goes, and suddenly by the end of the month, it's like, or end of the quarter, or whenever they're checking it, it's like, wow, our position's worth $1.25 million. We've got to sell $250,000 worth of stock to bring this back to 1%. So this is all that is, and it's nothing reflective of the company. Now, if you bought Nvidia here, like you bought some calls, and you're trying to hold through this, it's not going to work. And so the question is, one, do we, in a situation like this, how do you anticipate it? And then 2, can you trade it? Can you make a profit from this phenomena that always happens? And then, of course, 3, looking for a bottom to kind of get back in. So this is all part of the strategies that I'm going to cover this upcoming Thursday. Again, free webinar. And really the main strategy here is for identifying when this sector rotation and when this portfolio allocation rotation is happening in advance. So first of all, if you're long that position, you can get out. But more importantly, you can actually trade with them. As a remora, you can kind of attach yourself to their actions and follow them and actually profit when they're profiting on this reversion back to the mean. Okay, so it's a fun way to trade. It's less stressful. And it's fairly easy to spot if you know what you're looking for. So I'm going to talk about all this on Thursday night, 7 o'clock Central. This is December 7th, 8 o'clock East Coast time. And for those of you in California, that would be 5 o'clock Pacific. And also for those of you that are in California, I wish you the best with the wildfires out there. It's crazy. But again, this is the kind of stuff where, as opposed to just sitting there and just, holding and praying through the next pullback and hoping it works out, there's a much more active way to do this and really just kind of get in the same flow as the funds. Okay, so it's going to be a lot of fun, and I look forward to seeing you guys on the webinar on Thursday night.